On the morning of June 16, Micron Technology, Nasdaq, MU, a giant US semiconductor company, announced its new investment initiatives in China through its official WeChat public website. Micron announced plans to invest more than 4.3 billion renminbi in its packaging and testing facility in Lebanon, China over the next few years. Micron also said that it has decided to acquire the packaging equipment of Lisin Semiconductor, Lebanon, company. Micron will offer new labor employment contracts to 1,200 employees at Lisin Lebanon, said Mingxia Wu, general manager of Micron China. The new investment project will also add an additional 500 jobs, bringing Micron's total workforce in China to more than 4,500. In the evening of the same day, Micron filed a document with the U.S. Securities and Exchange Commission, SEC, in response to the impact of the review findings made by China's State Internet Information Office on its business in China since. The filing disclosed that revenue from customers headquartered in mainland China and Hong Kong, China, accounted for a quarter of Micron's total global revenue. Micron predicts that about half of the revenue from customers headquartered in China will be at risk. Once this news was released, it drew widespread attention. Micron announced this investment plan at this time, obviously with the consideration of stabilizing the Chinese market. Today's video, I'll share with you, the Micron event began. Micron event released the market gap China-made can really replace. Micron in this particular point in time additional investment in China, and what does it mean? Will the market pattern of memory chips really change as a result? Is this event a once-in-a-lifetime opportunity for Chinese chip manufacturers, or even the Chinese chip industry? Okay, let's get started now. I hope you can keep insisting on seeing the end, you will definitely get something, and you are welcome to share your views. Things went back more than a month to May 21st. The evening of that day, China's State Internet Information Office notice said that Micron's products sold in China failed to pass the Network Security Review. The review found that Micron's products have more serious network security problems, causing significant security risks to China's critical information infrastructure supply chain and affecting China's national security. Therefore, in accordance with the requirements of the Network Security Law and other laws and regulations, operators of China's domestic critical information infrastructure should stop purchasing Micron's products. By noon the next day, Micron said, "We are evaluating the findings and considering our next steps. We hope to continue to communicate with the relevant Chinese authorities." This is the first cybersecurity review case that has explicitly failed since China's cybersecurity law and other laws and regulations came into effect. Micron is the world's third largest memory chip giant, with a market share second only to the two Korean memory chip giants Samsung Electronics and SK Hynix. So, why did Micron fail the cybersecurity review this time? And what impact will this review have on Micron and downstream Chinese companies? In fact, as early as the end of March this year, when China's State Internet Information Office issued a notice announcing the launch of a cybersecurity review of Micron's products sold in China, many Chinese storage module companies and industry customers have been consciously working on supply chain backup. Whether it is wafers or modules, there are more options in the field of storage chips, and everyone has a more diversified supply chain. According to data from CFM Flash Memory Market, a leading industry consultant, Micron's DRAM, volatile memory, and NAND flash, non-volatile memory, product sales accounted for 19% of the total global market size in FY 2022, including 11.7% of the NAND flash market sales and 24.8% of the global DRAM market sales. Right now, with Micron's chips have significant security risks, the choice of independent and controllable Chinese domestic chips strengthen the resilience of the supply chain has become the primary consideration of the relevant Chinese enterprises. Micron ban will greatly accelerate the field of memory chips. The domestic replacement process has become the general consensus, but there are still doubts about whether Chinese manufacturers can successfully fill the market gap left by Micron. If the most stringent restrictions are estimated to include semi-finished products such as storage wafers, according to Micron Technology's 2022 financial data, its withdrawal from the market at this time will leave a minimum of $3.3 billion gap in the market to be filled by other manufacturers. China's storage market demand has been relatively large, but import dependence is serious. Memory and wafer, two major areas of overseas brands' market share, are more than 90%. The market concentration is high. The current Micron accidental out of the game to China's domestic manufacturers a rare opportunity. the order will be shifted to Chinese domestic manufacturers to build a diversified supply chain. Is the prevailing practice in the industry in recent years. The benefit is inevitable. However, insufficient production capacity and lack of market validation are the main challenges facing Chinese private brands. This year, the United States continues to increase the export restrictions on advanced process manufacturing equipment. The production of DRAM below 18 nanometers process, 128 layers of NAND flash-related equipment have been included in the control, resulting in Chinese companies want to expand production capacity in a short period of time is still relatively difficult. Coupled with technology and Samsung, SK Hynix, such head enterprises, there is still a gap. Want to eat the share left by Micron is not easy. DRAM field has high technical and financial barriers, and the market is highly concentrated. As a leading domestic enterprise in this field, CK Storage has built a 12-inch wafer fab and put it into production, and achieved mass production of several chips based on advanced processes. In terms of NAND flash, CK Storage has developed 128-layer QLC 3D NAND flash memory in 2020, and the performance level is already comparable to Samsung, Hynix, Micron, and other international head manufacturers. But the technical catch-up does not mean that China's domestic storage manufacturers are fully equipped with the global giants' arm wrestling ability. In addition to the technical gap, the lack of production capacity is also the topic of domestic storage chip companies cannot get around. According to last year's estimates, Changshin Storage to the end of this year can reach 120,000 wafers per month capacity. Changjiang total capacity this year should be able to reach 200,000 to 300,000 wafers per month level. However, according to the 2021 capacity data released by professional organizations, Samsung Electronics has a monthly wafer capacity of 4.05 million in 2021. Micron is 2.054 million per month, SK Hynix 1.982 million per month. Objectively speaking, Changjiang Storage and Changshin Storage in technology and production capacity of the accumulation, to a certain extent, to change the pattern of China's domestic storage wafer market, but also to look at the gap objectively. Do not kill the Chinese brand. Micron this exit from the market white, a significant portion of corporate orders should be transferred to Samsung, SK Hynix and other non-US manufacturers. Since last year, the weak market demand led to a continuous decline in consumer electronics shipments, so that the storage chip industry collectively into the winter. Now, with Micron Technology's unexpected fall, the industry seems to be able to use this to usher in the moment of supply and demand pattern change. Right now the entire storage industry has been hit hard, especially in the fourth quarter of 2022, and many vendors are starting to enter a loss-making situation. To slow down this trend, these original manufacturers are actively or passively taking actions such as production cuts, which seems to be the only solution to reshape the market supply and demand pattern. Micron, Western Digital and Hynix all started to reduce production in Q4 last year to ease the inventory problem. From the sales data of major manufacturers, Samsung Electronics NAND flash sales revenue in the first quarter reached $2.935 billion. Down 17.3% YOY, with a market share of 34.2%, while DRAM sales revenue reached $4.065 billion, down 24.8% YOY, with a market share of 42.7%. Armorman's NAND flash revenue in the first quarter was $1.853 billion, down 5.8% YOY, with a market share of 21.6%, down 5.8% YOY, with a market share of 21.6%. SK Hynix's NAND flash revenue for the quarter was $1.318 billion. Down 25.2% YOY, with a market share of 15.3%, and DRAM revenue for the quarter reached $2.315 billion, down 32.1% YOY, with a market share of 24.3%. At present, the terminal market inventory has gradually fallen to a healthy level, but demand is slow to pick up. Terminal procurement demand is not urgent and very cautious, so ultimately presenting a tight game of supply and demand, and chip manufacturers' slightly underdog situation. And in the market at the time of fierce game, the sudden occurrence of the Micron incident, the unexpected vacated 23.3 billion yuan of market gaps, is undoubtedly a surprise to other rivals in the industry. But only a month has passed since the incident, and then the scene at the beginning of the video happened. Some analysts pointed out that although China's State Internet Information Office announced a month ago that Micron's products failed to pass the network security review, and that China's domestic critical information facility operators were not allowed to buy its products, it did not prohibit customers other than critical information facility operators from buying Micron's products, so it does not mean that Micron completely lost the Chinese market. US stock analyst Zacks Equity Research said in a post that Micron's latest announcement could be seen as a balanced move to keep its business running, especially in light of current US-China trends in the technology sector. Micron said it is working to mitigate this impact and expects quarterly revenue variability to increase. Micron's long-term goal is to maintain its global DRAM and NAND share. So how should we rationally view the strength and subsequent impact of Micron's additional investment in China this time? Mingxiao Wu, general manager of Micron China, said that after the completion of the new addition, new equipment and processes will be introduced in Lebanon. The acquisition of Lixing Lebanon enables Micron Lebanon to directly operate all packaging and testing operations. The semiconductor production process is mainly divided into several segments, such as wafer manufacturing, packaging process, and testing process. This Micron investment in China is mainly the latter two, that is, packaging and testing business, but wafer manufacturing is the core business, which remains outside mainland China. So this investment behavior of Micron, from the amount of money invested and investment in non-core business, non-wafer manufacturing, the strength is really not much. Dwarfed by Micron's recently announced $40 billion in new investments in the US, as well as the rumored $1 billion in new investments in India. In contrast, Samsung and Hynix are investing in core wafer manufacturing in China. In addition, Lixing Lebanon is a foreign joint venture, so theoretically Micron's acquisition of the company would not require the initiation of a national security review process. But given that Micron's products have not previously passed cybersecurity reviews, there is still some uncertainty as to whether the merger will receive regulatory approval. Moreover, Lixing Lebanon's current investors do not include US-owned companies, and if sold to Micron, it would be subject to US export controls. As a result, the acquisition may not be good for China's own supply chain. The US government could impose a new ban on Micron's factories in China at any time, requiring it to cut off supplies to Chinese companies, and Micron would have to comply. It is important to know that as early as January 2022, Micron disbanded its Shanghai R&D center of about 150 people in size, and selected more than 40 core R&D staff to qualify them for technical immigration to the United States. And while Micron relies extremely heavily on the Chinese market, on the other hand, it frequently launches cross-border IPR infringement lawsuits against Chinese companies, and pushes the US government to initiate export controls and sanctions against China. In 2017, Micron reported that UMC was allegedly stealing trade secrets from Chinese DRAM maker Fujian Jinhua. And in 2018, what was a technology patent dispute between companies was suddenly elevated to a threat to national security by the US government, which added Fujian Jinhua to its list of entities, causing the ongoing construction of the Fujian Jinhua's factory was directly shut down. In addition, Micron is one of the companies actively using the CHIPS Act in the US. In 2022, the US introduced the Chip and Science Act, or CHIPS Act, which provides $52.7 billion in subsidies to the US semiconductor chip manufacturing industry, expanding the eligibility of upstream suppliers of semiconductor equipment and materials, in addition to semiconductor manufacturers, for subsidies that provide tax incentives for manufacturers to invest in the US. The premise is that manufacturers must agree to certain restrictions. US chipmakers receiving funds from the CHIPS Fund must agree not to expand production capacity in China for 10 years after receiving the funds. According to Micron's August 2022 disclosure, it will build and operate new chip and semiconductor manufacturing facilities within the United States in 2025. Everything in the world is in the process of change, for a certain industry is no exception. Things will eventually go where? We can only wait and see.